Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, where you can find the link to the website in the description below. Coal may be dirty, but it's imperative for a green economy. And why? Thermal coal, which also goes by the name steam coal, is used to generate both electricity and heat. And while it's a major contributor to greenhouse gas emissions, it's also responsible for supplying roughly 25% of the world's primary energy and 40% of global electricity. And the outlook for thermal coal remains pretty solid too. We can thank electric vehicles, data centers, and artificial intelligence revolution for that. Data center growth is forecasted to exceed 150 billion through 2028, fueled by AI, which is much more energy intensive than traditional data centers applications. Electric vehicles could account for 6 to 8% of total electricity demand by 2035, up from just 0.5% today. Here in the US, electric light vehicle sales are estimated to reach approximately 55% in 2030 and expected to go as high as 70% by 2035. All of this bodes well for Alliance Resource Partners LP, traded on NASDAQ under symbol ARLP. John, what can you tell us about this company?
Thanks, Mo. Yeah, Alliance Resource Partners LP, the largest coal producer in the eastern US, serving utility, industrial, and steelmaking customers both domestically and internationally. In 2023, it shipped 34.4 million tons of coal. Of that, I think approximately roughly 81% was purchased by domestic electric utilities, 15.7% was sold into international markets, and 3.4% was sold to domestic industrial customers. Now, Alliance Resource is also a diversified natural resource company that owns a growing portfolio of mineral and royalty interests in strategic oil and gas producing regions across the U.S. It markets its oil and gas mineral interests for lease to major operators in those regions, and it generates royalty income from the leasing and deployment development of those mineral interests. The partnership also generates coal royalty income from mineral reserves and resources it owns, leases to its coal mining operators.
I was reading that in the third quarter of 2024, it delivered sequential improvement in revenue and coal sales.
You read correctly. For the third quarter, ended September 30th, 2024, Alliance Resource Partners announced that revenue actually slipped 3.6% on an annual basis, but was up 3.4% on a sequential basis at $613.6 million. Oil and gas royalty revenue is up almost 12% on an annual basis and 5.8% on a sequential basis at 864 million barrels of oil equivalent. Now, coal sales were down 0.9% again on an annual basis, but we're up 6.7% on a sequential basis to 8.37 million tons. Net income came in at $86.3 million or 66 cents per partner unit, and that's down from $153.7 million, I think, or $1.18 per unit for the same period in 2023. Now, Alliance Resource ended the quarter with total liquidity of $657.7 million.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, looking at the dividend this company provides, it recently maintained its quarterly distribution of 70 cents per unit.
Yeah, thanks to its conservative balance sheet and reliable distributable cash flow generation, it's able to provide its shareholders with a reliable distribution. Since its inception in 1999, the partnership has paid cumulative cash distributions of approximately $4.3 billion. Now, this past October, it declared a quarterly cash distribution of 70 cents per unit, or $2.80 per unit for a current, as it's recording, a dividend yield of 10.54%.
And finally, let's talk a little bit about ARLP units. They just hit a record high.
Yeah, now normally an ultra-high yield dividend, or in the case of a limited partnership, the distribution is tied to a share or unit price that is underperforming. That's because dividend yield and share price have an inverse relationship. Now, that's not the case with Alliance Resource. On November 27, 2024, ARLP Stock hit a record high of $29.44 per share. Now, it has given up some gains on short-term profit taking. Still, it finished out 2024 with gains of approximately 40%. Now, as of this recording, ARLP units are trading at $26.56 per unit. and continues to outperform the S&P 500, trading up, I think, 5.5% over the last 3 months, 10% over the last 6 months, and 36% on an annual basis.
John, thank you so much for your insights. Just to recap, Alliance Resource Partners is a thermal coal giant that continues to deliver strong operating and financial results. This includes record results in 2022 and 2023 and solid results in 2024. Domestically, significant growth in the U.S. electricity demand from electric vehicles, onshore manufacturing, and data centers, including AI, has delayed the retirement of coal-fired power plants. Looking longer term, underlying coal demand for non-traditional markets is accelerating, especially in markets it serves in the Midwest, Mid-Atlantic, and Southwest. This is all good news for the 161 institutions that hold 19% of all outstanding shares. Some of its largest institutional holders include Bank of America, JP Morgan Chase & Company, Morgan Stanley, and the Goldman Sachs Group. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.